The time now is 8:46. The Federal Reserve meets again today to decide once again whether to raise interest rates. Also, it's shaping up to be a busy week on Wall Street with more than 150 S&P 500 companies reporting earnings. Joining us for some insight on all this and how much money is going to cost you is Ashley Terrell, a financial advisor at Burns Estate Planning. Good morning to you.
Hi, good morning.
What are you looking for when it comes to interest rates?
So I think everyone is expecting a 25 basis hike today. That is pretty much priced into the market.
Meaning a quarter of a point.
Yes,
basically.
quarter of a point. That is priced into the market. The CME data came out estimating that 99.8% of investors are expecting the 25 basis rate hike. So I don't see much fluctuation in the market there. But the real question is, what are the Fed's tones from here? Are they going to remain hawkish? Are we going to get that soft landing that we're looking for?
So this afternoon, Jerome Powell, the Fed chair, will hold a news conference, and he'll kind of give that indication, and then we'll see what the market reaction is from there.
We'll see how it goes from there.
Do you think this is a one and done, or one more, if you will, and done after this?
You know, I'm not quite sure. I hope it is. Previously, they had stated that they are going to do 2 more rate hikes this year, so we can expect 1 now. I'm not sure if they're going to stay true to that 2 rate hikes this year, but I guess we'll know more later today. Well,
it's funny because I was looking at Wall Street. The Dow is up about just over 3 points, period. I mean, it's up 0.02 of a percentage point. Obviously, investors are just they're like football fans on the sidelines waiting to see how it all plays out.
Absolutely.
The argument for it is we haven't tamed inflation, but there are people who say, look, this could hurt the economy.
Right. There are some indicators showing that what the Fed is doing is working, and we believe, hey, while you're seeing those indicators and we're not doing too much damage to the banking sector, let's stop while we're ahead and see where we go from here versus being a little bit more aggressive, because that could be detrimental to the banking industry and our economy.
In the meantime, something that could drive an individual stock is 150 S&P 500 companies are reporting how much money they made.
Yes. Headliners are GE, Visa, Microsoft, and Google. GE and Visa actually surprised me. Visa is able to get momentum off of the shift to a cashless society. So people are using their debit and credit cards, and they have benefited from that. Google and Microsoft.
Let me back up. Just the sheer act of going in and using your credit card or your debit card instead of using cash is helping them.
Yeah, absolutely. There's those fees that Visa, MasterCard get every time you swipe your card, and they're definitely benefiting from that.
And then forgive me, what's driving Microsoft?
Microsoft, there's a couple things driving them, possibly the cloud, but their earnings were phenomenal. We did expect a little bit more from the cloud that we didn't see, but again, they beat earnings, and so we're going to see how it goes with that one.
Fascinating, isn't it? All this stuff we talk about that wasn't even on the radar, like the cloud and AI and all
Yes.
the others, not so long ago. Ashley Terrell from Burns Financial, thanks very much.
Thank you.